What is going on, investors? Hope the guys are doing well out there. It is earnings season, and we only get this time of year, 4 times a year, every quarter. Major corporations report their earnings, and we have just been getting a glimpse of the large financial institutions. On Friday, we did a video on JP Morgan, and today, on Tuesday, April 16th, we got earnings from Bank of America, ticker symbol BAC. Look, over the last year, shares have done relatively well, up 14.5%. I know we talk about tech stocks a lot of times on this channel, and Nvidia's up like 70% this year and like 200% over like the last year or two. So, I mean, look, Bank of America is not going to outperform a lot of the tech stocks, but to have a well-rounded portfolio, you got to have a little financial exposure as well. Now, also, when we look at the bank stocks, it's given us a window into the consumer. I know a lot of us are listening to the Federal Reserve and Jerome Powell. Guys, he's just another representative from the United States government. I don't think you're getting the full story here. But the truth is, when you come over here and look at Bank of America, you're going to get the full story. You're going to get a window into the consumer because it's one of the largest consumer banking institutions out there. We'll focus primarily on the consumer. They got wealth management. They've got some corporate stuff. But I just want to focus on this stuff because it is not looking good here. And then we'll also come over here and look at the unrealized losses. So a lot of these banks are holding treasuries and bonds, which as interest rates go up, the value goes down. So there's an inverse relationship. As interest rates go back down, the price of bonds should go back up. Well, we've had the reverse. And so anybody like a large bank who's been holding nearly $1 trillion worth of debt securities as interest rates have gone up, well, guess what? The value of that has gone down. And so it is hurting Bank of America to a certain degree. And then we'll also look at this from a technical perspective. We'll look at the longer term 12-year technical pattern that we've been making. We'll look at where investors are accumulating shares and give you an idea where maybe Bank of America is going to trade. Now, like we said, over the last year, it's traded up 14% year to date, even despite about a 3% decline in the shares after reporting their earnings today. Shares are up about 3% year to date. And that's not total return. You are getting a dividend on this one as well. So it's probably slightly higher than that. Now, Q1 earnings came in at $25.8 billion. That was a decline year over year on the revenue side by about 1.8%, but that's what Wall Street was expecting. In fact, Bank of America beat expectations by about $430 million. As we look forward several quarters, Wall Street's anticipating negative growth, and on the conference call and in guidance, Bank of America did nothing to change Wall Street's expectations. You're going to have flattish, if not negative revenue growth. For some reason, Wall Street's anticipating low double-digit growth in the fourth quarter. And it'd really be up to Bank of America for meeting that expectations because there's probably some people still in the stock pricing in that 12.5% growth in the fourth quarter. If it comes, it comes. If it doesn't, well, shares are probably not going to perform relatively well. Now, when you look at these large bank stocks, what I like to do is look at average deposits. Are those up or down? If people are drawing on their deposit, could mean a couple of different things. Could be a little bit of stress. It could be in some situations that Bank of America's checking accounts and their savings accounts, I don't have one at Bank of America, so I don't know, but it could be that they're not offering a high enough yield. And so if you got $10,000, $5,000, whatever it is, maybe $100,000 sitting in a checking account, you might as well move that over to a money market fund or some other fund, earn 4 or 5% interest rates. And so that could leave average deposits down. But we saw it at JP Morgan. We're seeing it at other banks as well. Deposits are getting drawn on, and your average loans and leases, those are starting to increase. Now, some of that has to do with the fact that you've got interest rates ticking up, inflation obviously increasing the price of things like homes and cars and other types of things. And so your average loans and leases up. Not a great trend, though, in the longer term as you have average deposits decline, loans up. At some point, that could create some financial stress in the banking sector. And as we come over here and look at things, and we'll dive into these even a little closer here in a moment, I think we're seeing a little bit of stress in the consumer. So we got consumer banking at Bank of America. Total revenue came in at $10.1 billion. So the company has $25 billion total corporate-wide everything that they do On the consumer side, it's just less than half of that. We see over the last year, it's actually down, and even quarter over quarter down as well. The all-important provisions for credit losses. This is money that Bank of America sets aside just in case you don't pay your mortgage or pay your car loan or pay your credit card bill. We're seeing this relatively flat year over year, down quarter over quarter. It doesn't paint the full story. We'll get to more of that here in a minute. Not seeing a lot of operating leverage when it comes to Bank of America. Their non-interest expense basically flat year over year despite somewhat declining revenue. That's going to impact your net income. Your net income went from $3.1 billion on the consumer side down to about $2.7 billion. We also talked about that average deposit number. It was over $1 trillion this time last year, and we're slipping down now to 952. Your loans and leases, here it is, 303 last year, up to 313. Here's your average credit card balances as well. That ticked from 91 up to 99, although just slightly less than it was a quarter ago. Fourth quarter, you'd expect some people to put some stuff on their credit card as you're buying discretionary gifts for the Christmas season. Now, all important provision for credit losses. This is the entire corporate ride credit quality. You're seeing you're up from 931 all the way up to 1.3. I mean, that is like a 40% increase there. Even over since December, you went from 1.1 all the way up to 1.3. Here's your net charge-offs. This is what Bank of America is saying. Yep, they ain't going to pay this. Well, it went from 807 all the way up to 1.5. Okay, that's even higher than we were in December at 1.2. Here's your charge-off ratio. If you want to look at this from a percentage basis, 0.32% all the way up to 0.58%. Non-performing loans and leases from just under $4 billion up to nearly $5.9 billion. That is even higher than we were a quarter ago. Here it is from a percentage basis, 0.38% all the way up to 0.56%. Across the board, we're seeing charge-off quality get worse at Bank of America, and we'll see if that trend continues. This is not a good trend. If this continues, well, first thing you're going to have is a reversal from the Federal Reserve, but will it come too late? If they continue to squeeze consumers the way they are in terms of interest rates, these numbers will continue to get worse. Obviously, inflation plays a role in there, so the Fed has a careful balance that they have to play. They obviously have to tamp down inflation, but at the same time, they could wreck the economy and wreck the balance sheet at Bank of America. Now, we talked about debt securities. Bank of America can't take every dollar that comes in and go give a car loan or a home loan or a business loan. Banks don't simply operate that way, but also from a regulatory perspective, they're just not allowed to do that. So they take on these debt securities. You've got commercial loans, you've got U.S. Treasury and government debt. They've taken a loss on that. You've got mortgage-backed securities. They've taken a huge loss on that. Take a look at Bank of America. Their total debt securities, their amortized costs, so what they had to pay is $913 billion, nearly $1 trillion. Look at their gross unrealized loss. So if they had to sell today, they would have a loss of $112 billion because this 913 is only worth $800 billion. And we've seen over the last just a couple of months, it's gotten worse. They were at 875 with an unrealized loss of about $102 billion. So this continues to get worse as interest rates stay where they're at. And even if for some reason, even JP Morgan, I think, was saying that they potentially might see interest rates go to 8%, you would see this get even worse over at Bank of America. So all this is contributing to the shares declining not only today, but over the last month. I've got this chart on a monthly view so we can take a look at this just beautiful trend that we've been making really since the depths of the financial crisis, or actually more or less, well, you could draw this all the way back to the 2008 drop, but really since 2011, you've been making a beautiful technical pattern. It's one that we've pointed out numerous times when we look at Bank of America stock. Anytime you're in these types of channels, buyers emerge towards the bottom of the channel, but you only get a small amount of time to purchase shares usually at the bottom of the channel because everybody's looking at the same chart and everybody's looking at the same graph. In fact, over the past 12 years, you had maybe a month to accumulate shares at Bank of America. That's why when the shares were approaching and touched this $26, $28 level, I think this was several months ago, we did alert people that this historically has been a relatively decent time to buy Bank of America stock. Now, when you move to the top of the channel, that's if you want to shave off some of your position, reallocate, take some profits. That's an excellent time to do that. Now, what we often do is with this green line right in the middle, I like to dissect these channels right in the middle because as you see, that is when you have some support and more recently, some resistance. Shares of Bank of America getting rejected at this level, not surprising at all. Also, what I have on here is we were doing some technical analysis for another video on cryptocurrency or Bitcoin. We have a volume profile. What this is showing you, the longer that these green and red lines stretch out, this is showing you where you have buying and selling accumulation. And at no shock, it is down here at this level that, again, technically takes you down to where this purple line is and pulls you into that $27, $28 per share. I've got to imagine, unless there's some magic reversal, that Bank of America is going to want to suck back down here to about the $28, $29. And it's your decision. If you want to add to a position, start a position. Historically, it's been relatively good. Also, again, keep in mind from an allocation perspective, Bank of America is not NVIDIA. It's certainly not Google or Microsoft or a lot of the tech companies that we cover, but it does give you some balance to a portfolio, does give you a little bit of dividend growth, and we get a Fed Reserve reversal. Some people might think that's negative for the bank. Their net interest margin's not as good when interest rates go down, but it should spur a lot of loan growth. It could ease some of the charge-offs and some of the bad debt that these companies and this bank experience, and so it could actually benefit this company. In fact, when you had low rates for a decade, shares of Bank of America went from $5, $6, $7, $8 all the way as high as $50. So low interest rates are actually pretty darn good for banks because they generate a lot of loans, generate a lot of fees, and people don't tend to charge off and are delinquent on loans that have a very, very low borrowing cost. Folks, that was Bank of America. We'll be back again. It's earnings season, guys. We're going to do as many of these as we possibly can. Hopefully, guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.